Guys, strap in, because technically the market is currently squeezed to the most extreme point in its history. Calling this just a contraction is an understatement. I'm calling this the silence before the Big Bang. On one side, we have a massive $145 million liquidity trap waiting at $91,000. On the other side, a terrifying siren is ringing on the monthly MACD. Within the next week, maybe even while we are talking right now, this market is going to make a massive move. So, are we blasting off or are we crashing back to $70,000? Today, we are putting all the cards on the table. Hello everyone, welcome to the Bahoretti channel. Today, we aren't just looking at charts, we're diving into market psychology and the traps set by the whales. If you want to protect your capital and surf this massive wave, you are in the right place. Before we dive into the analysis, make sure to smash that subscribe button and turn on the notification bell to all so you don't miss these critical updates. Let's break the like button right now to get the algorithms ready for this explosion. If you're ready, let's go. Let's start with the biggest elephant in the room, the squeeze. Look, it's not just that the Bollinger Bands are tightening. The real story is in the horizontal volume band. We are seeing a massive swelling here. What does this mean? It means the price is coiled like a spring and there is incredible energy building up inside. The technical data tells us that this explosion is highly likely to happen within this coming week. But which way? The structures on the chart, specifically the expectation of a flat V recovery rather than an inverted V, are whispering to us. The momentum is pointing up. But what's our proof? Let's zoom into the short term. Why are we expecting an upward explosion? Here is the evidence. Number 1. We have a massive inverse head and shoulders, inverse H and S pattern on the 3-day chart. The market has stopped making lower lows and is starting to shift the trend. Number 2. This is critical, so listen closely. While the price is making new higher lows, the CVD, the volume delta, is making lower lows. We call this bullish absorption. It means someone is selling aggressively, but the buyers are so strong, they are absorbing that sell pressure like a sponge. The price isn't dropping. Number 3, and my favorite part, the short squeeze. Right now, sitting just above the $91,000 level, there is about $145 million worth of short positions waiting to be liquidated. If the price wicks up to that level, those positions will pop, acting as rocket fuel to push us straight to $97,000 and $98,200. Looking at the chart isn't enough. We need to follow the money flow. Right now, USDT dominance, the cash ratio, is at a critical resistance of 6.44%. There is an interesting analogy here. Think of it like this. If the DXY, dollar index, is the general, USDT dominance is the soldier. If the general, DXY, doesn't provide backup, USDT dominance cannot advance alone. It has to retreat. Right now, DXY is showing signs of weakness. If USDT dominance breaks below 5.97%, that lights the fuse for a massive crypto rally. Add to that the inverse correlation with silver and on-chain data showing whales treating these levels as a dip to accumulate, and the picture gets clearer. This is the Bahoretti channel, and we don't just sell you dreams here. You need to know the biggest risk on the table. Guys, the monthly MACD has crossed to the downside. Historically, when this signal flashes, Bitcoin has experienced drops between 65% and 77%. We are currently down about 36% from the top. For a historical average correction of 50%, Bitcoin might need to visit the $70,000 to $75,000 band. This region has been a steel-like support for 8 months. If things go south, that will be the safest accumulation zone for long positions. It pays to be cautious. Let's wrap this up. The current market is like a dam. The water level, price and volume has risen incredibly high. The Bollinger Bands are tight, meaning the dam walls are under maximum tension. If USDT dominance loses support and cracks, the dam breaks, and that liquidity flushes us up to $98,000. On the downside, $89,000 is now our fortress. On the upside, $91,000 is the psychological wall we need to breach. Keep your eyes on the total market cap closing above $3 trillion. If that happens, the bullish scenario accelerates. The market is currently waiting to punish the impatient and reward those with a strategy. We are going to stay on the side with a strategy. To stay updated during this critical week, don't forget to subscribe and like the video. I hope to see you in the next video discussing that massive breakout. Bahoretti signing out. Cheers!